That was the Reserve Bank of India's press conference on the policy decision announced this morning. Status quo policy. No further really updates coming in as to the guidance for the market. There are some specific questions, though, that the governor addressed. For instance, on the recent action against some of the NBFCs and banks, highlighting the fact that there are 9,500 NBFCs in the universe, and action has been taken only against 3. And so the scale of the action is limited to only where they've seen some sort of issues. Apart from this, the banks also must invest more in their IT infrastructure, but there's a prescribed level from the Reserve Bank of India. The RBI will not prescribe any credit deposit ratio, also coming in from the Deputy Governor. But apart from that, of course, to bring the focus back on the policy itself and, what happens now with this 4-2 vote that we've got on the status quo policy, we have with us a whole host of experts to pass through the governor's statements. Soumya Ghosh of State Bank of India, Avnish Jain of Canara Robeco Asset Management Company, and Pranjul Bhandari of HSBC. We also will be joined by Sandeep Bagla, CEO of Trust Mutual Fund. Thank you very much, all of you, for your time here. And, let me just start with you, Pranjul. Any additional takeaways from the press conference and specifically on that 4-2 vote? Does that bring forward the expectations of a change in stance perhaps earlier than, what you had earlier penciled in?
Well, I think, on the surface, it might seem that this was a slightly hawkish policy meeting like the previous one, especially with the growth number being increased from 7.7 to 7.2%. And we can discuss that later. But I think if we look beneath the surface, I think there were enough hints in the meeting today that monetary conditions will actually be a bit looser going ahead, into the second half of the calendar year. And I say this for a couple of reasons. One is what you have pointed out, that 2 of the external members have now, clearly called for a change in stance and also like a rate cut going ahead. And this puts pressure on the others, right? Are others missing out on something? Are others moving too late? And this will definitely play an important role. So I think that has been a very big change on the margin. The second one has been this very, very careful statement by the governor on, do we really need to follow the Fed? It's the first time he's brought this question out in such an open manner. And I think it really goes to show that perhaps he's waiting for a few events, and which, if they happen successfully, maybe there can be a case for cutting rates. And I think one of the major events is monsoon rains. If June, July monsoon rains go well, in August, perhaps, if he feels the confidence that food prices are falling, he could give some hints, following it up with a rate cut in October. And then there is liquidity. The fact that we know from that in a month down the line, we have the government which will start spending. We'll have JP Morgan bond inflows coming in. And generally speaking, liquidity will be a little bit looser. Of course, the RBI will use an array of tools, but liquidity on the whole will probably be more looser, and short end rates would more closely track the repo rate. I think all of this makes a pretty decent scene to suggest that going ahead, monetary policy could be a little looser than it has been the last couple of months.
Oh, yes. And on liquidity, the governor has left us guessing at what new tool could emerge this time around. And no, guidance really on what happens when the bond index inclusion-related inflows start to come. He said we managed it before and we will continue to manage it now. Soumya Ghosh, same question to you. This surprise voting pattern change, now 2 members against the status quo on both rates and stance, what that means. And also, if you read into the governor's statement saying, there is clearly greater confidence on growth, giving them more elbow room to act on inflation. Does that mean the expectations of a rate cut cycle are getting pushed further down?
Yeah, thank you, Ritu. I think regarding the first statement of this voting, I think 4-2, if you look into the past policy statements, the minutes of the last couple of meetings, I think this was on the cards from 5-1 to 4-2. And my sense is that I think the term of the current MPC committee ends in August. If I just jog back our memory to 2018, when the MPC was first constituted, the first set of members took up their mantle. I think the first rate cut decision was announced in October. So my sense is that I think this was expected, given the fact that inflation, the rate hike cycle has possibly run the course. Now the mantle is on the inflation trajectory, and as per the RBI projections, the inflation numbers in the second quarter falls below 4%, that will give them a decisive mandate to begin to believe that whether the rate cuts will be done in the last quarter of this calendar year. And regarding the second point, I think to me, the most crucial aspect of this policy, and I think which the governor has also said in the meeting, is I think is a liquidity concerns, because liquidity definition has undergone a structural change in the last from the last 6 months. Even if the government spends now, that is not a sine qua non of an increase in the liquidity in the system, because liquidity has moved from the banks to the RBI, is moving from the banks to the RBI because of the new definition of just-in-time fund transfer, which the government is actually moving into. So if that is the case, that's why you will be actually seeing some innovative policy tools on the part of the RBI in the next policy announcements, and that is exactly which we are looking into.
Yeah, perhaps, and that's why, after the budget, when the government starts to spend, the expectation that liquidity will go up in the system may not play out as expected. But Avnish, your quick thoughts, not much insight into what RBI will do with liquidity. What do the markets want to hear, and how will they react to what's been said?
I think markets have been positive only. I think there was no expectation of any change in the policy rate or stance. I think any change expected was on the positive side. That means the stance would change to neutral. Now, as I pointed out, that now the voting is 4-2 for a rate cut as well as change of stance. So there will be pressure to at least move to neutral stance probably by August. So I think markets have taken it in a stride. I think markets have been positive, both from the US rate side, where rates have fallen from highs, as well as locally we are seeing when RBI projecting less than 4% inflation in the third quarter, the chances of rate cut brightens much more. And I would also agree with Soumya that we expect a rate easing in third quarter of FY25. And I think obviously Fed may play a bit of a role, while RBI has said that they will not look at Fed. But I think globally we have seen ECB cut rates yesterday and Canada also. So that may not be the biggest hurdle as of now. So we do expect markets to continue to do well ahead of inclusion. Flows have been extremely good. We have got more than 7 billion of flows from current year YTD in 2024, close to 8 billion. So I think very positive on markets.
Well, Sandeep, your quick thoughts as well. Nothing to really upset the markets here. And of course, the Reserve Bank of India governor reiterating, as Avnish was just pointing out, that the RBI is not going to follow the Fed, implying that perhaps there could be a rate cut before the Fed acts, or perhaps, it may not be linked at all. Just your quick takeaways from the policy this far.
See, very interesting what is happening in the central banking world globally. ECB cut rates, but at the same time increased inflationary expectations, which is fairly counterintuitive, which basically seems to point out that they are reducing real interest rates. And this is probably in a bid to spur growth. In India, we see that growth is fairly strong. And in fact, RBI has upped the growth estimate. So there doesn't seem to be any urgency to reduce rates or ease monetary policy, because there is no need to reduce rates to spur growth. If at all, one should be concerned that if growth is galloping ahead beyond the potential growth, perhaps monetary policy should be in a deficit mode. Liquidity is improving a bit, and I don't see any major rate cuts in the future. There could be rate adjustments. So there could be 25 basis point rate cut or rate adjustment, as I would call it, and which would not really push the needle any which way in terms of bond yields. If the expected inflation is in the range of 4.50%, my experience has been that market tends to trade 250 basis points above the expected inflation rate in terms of the 10-year bond yield. And that's exactly where we are. We are close to 7% on the 10-year bond yield. And unless inflationary expectations change in a major way, probably due to either domestic factors like food prices or global factors, which could be commodity or demand driven, I don't see interest rates changing in a very big way. We would continue to trade in a range of 6.9 to 7.10. And these are, from historical perspective, fairly good levels for debt investors to lock into the spreads. You are getting almost 250 basis points, 300 basis points on corporate bonds, of maturity 3 to 5 years. And these are good levels to invest in and stay invested and earn fairly good real rates. I don't see any major change in interest rate policy or interest rates till further data emerges.
All right, hold your thoughts, gentlemen and Pranjul. We have to take a very short commercial break, but we're going to be back in just a minute to continue our discussion.
Welcome back. We've just seen the governor speak after the monetary policy statement, and there seemed to be a sense that he was trying to be in fact, even more balanced in terms of being hawkish or dovish, trying to sound as neutral as he possibly could, very, very bullish on growth. So that seems to be the two big takeaways from what he said. But let me get that from the economists. Pranjul, are you changing your forecast after hearing the governor?
No, not really. But I do think that the hints I got from the policy meeting is that perhaps later in the year, he will probably run much looser monetary policy than he's running now. I think his statements on do we really need to follow the Fed was very important. And he also said something which was actually not in the governor's statement, that people who are not following my words are missing the bus. So I think we really need to take that view seriously. My sense is I'll be waiting for three things over the next 2 months to see if there's going to be a rate cut. Number one, the monsoon rains, how June and July look. If there's good monsoons, good sowing, then perhaps in August, he can give some hints and then cut in October. The second would be the budget, whether we'll have a contractionary or expansionary fiscal policy or not. If the budget continues fiscal consolidation and actually gives a path beyond 4.5% in FY26, going all the way to 4%, then I think there'll be a lot of confidence that we have, conservative fiscal policy, and that will give the monetary policy to ease a little bit. And third is the real neutral rate. Every country in the world is right now reassessing its real neutral rate. Some are revising it higher. And my sense is if the RBI revises it up higher, if it goes from 1% to say 1.5%, we still have room to cut. But if it goes to about 2%, then perhaps we don't. And I think that will be very important. And that, as Dr. Patra said, will be known in the next monetary policy bulletin or maybe in 1 or 2 months' time. So all of this together, my sense is if this works out, then by October, we see the first rate cut.
Okay, yeah, I just wanted to reiterate that point is well taken, Pranjul. In fact, it was I who asked the question about the new neutral rate, and Patra merely said wait for the next bulletin. Whether they want on the real rate, they absolutely refuse to say anything. We have to see whether the neutral rate gets revised. Just for those who are not following these terms very closely, just monetary policy jargon, the neutral rate would be the difference, the rate at which both GDP and growth are at where the policy wants it, or rather where inflation is at target. That would be the rate. The real rate is the difference between the nominal interest rate, which is 6.5% now, minus inflation. That would be the real rate. At the moment, as you can see, the inflation forecast is 4.5% and the nominal interest rate is 6.5%. So it's 200 basis points, which of course Jain, Verma and Ashima Goel have been saying is too high. But we want to see the Reserve Bank's view of what they would like the difference to be. The real rate, actually. Soumya, any changes at all after you heard the governor, to your rate cut expectation date or to your forecasts?
No, I think, thank you, Ladan. I think we are already at 7.5% and I would like to stay there. But the most important point, 2 points I would quickly like to make. The first is regarding the real rate. I think the definition of the real rate, if the RBI says is going to change, which is around 90 basis points when it was last published, that will determine whether the rate cuts which the RBI wants to undertake towards the later part of the year is shallow or a little more elongated. So I mean that whether it is 50 basis point or it is more than that. So it will squarely depend on that. The second thing is that I think the RBI may not like to change the stance or the rate cut differently because we live in a world of uncertainty.
Soumya, may I apologize? Narendra Modi has started speaking and we will have to listen in since we will know something about the formation of the cabinet.